What's going on, guys? So let's talk about Trump and Powell's conflict with each other. It looks more like Donald Trump is the aggressor. Powell's just trying to do his job. But this is funny, but it's also scary at the same time because we just don't know how this is going to turn out, right? He definitely tried something pretty much yesterday, which really that definitely caused some market turbulence, but he went against it. But just hearing how he talks about Powell, right? Which makes sense from his perspective that he wants Jerome Powell to cut rates because of his physical policy, right? So rate cuts right now would definitely it will do really good for the economy, right? Lowering he wants rates at 1%, which would be crazy, but it would boost businesses, right? It would definitely help the economy flourish, right? And this is exactly every president wants that. This is why he's going at him so hard, saying like, "Oh, this guy wants to ruin the economy," blah blah blah. But the Federal Reserve is a private entity. They do not follow politics, right? So the Federal Reserve, the central banks in general, their goal is market stability, is inflation stability, right? So they don't care what's going on in the economy. They do, but they don't care about the politic aspect, right? Because what is going on with tariffs is also inflationary. So he's not going to want to cut rates because Trump wants him to, right? He's going to do it when they feel that the economy is ready for it. But could it still lead to possibilities of Powell doing this because he doesn't like Trump? Or like it's a possibility, like if you hear the shit that the guy is saying about him, you'll probably want him to get the short end of the stick too. But it's funny, like I just want you guys to just listen to this.
On the Fed, sir, would you fire Jerome Powell over the Treasury foundation?
Well, he spent $2.5 million building this place. I have to say this. I think he's terrible. I think he's a total stiff. But the one thing I didn't see him as a guy that needed a palace to live in. You talk to the guy, it's like talking to a nothing. It's like talking to a chair. No personality, no high intelligence, no nothing. But the one thing I would have never guessed is that he would be spending $2.5 billion to build a little extension onto the Fed.
Is that a fireable?
Nobody's ever seen. I think it sort of is, because if you look at his testimony to the House, the Senate, you take a look at the testimony, it's under it. That whole thing is, he's not talking about the problem. It's a big problem. 2.5 billion, and that's 2.5 billion now. That's going to be a lot more money than 2.5 billion to expand. And with all of that, to house thousands of people to give him information, and yet out of the 71 economists, and they included me and one other person got it right. I got it right, and one other genius got it right. They had everybody else was wrong. 69 were wrong, and 2 were right. I was one of them. And I don't have a lot of people. I have Howard. I have Doug. I have a few people. He has thousands of people, and he got it wrong. No, I think when you spend $2.5 billion on really a renovation, I think it's pretty disgraceful.
Chair, sir.
This is funny, just like him calling him stupid and all of these names is so funny that he's on his target list, but we have to follow data, right? And this is what I want to talk about you guys. Like, what do you think? You think that we're in a position to actually cut rates like this month? You think that we should cut rates this month, or you think that the Fed should actually pause? Because if you're paying attention to economic data now, you know how inflation is going. We see how growth is going. We see how labor is going. Do you feel that Jerome Powell got it wrong, Trump is right, or you feel like Jerome Powell got it right and Trump is wrong? Like your answer really matters because you guys live in the United States. Some of you that do, you see inflation. You go outside every single day. And when you're paying for goods, do you feel that the prices of like grocery bills, your gas, do you feel like it was like how it was 5 to 10 years ago? Do you see how it was before Biden's administration? Or every time you go outside, you go to the grocery store, 3 to 4 items is like over $150, right? So it kind of seems like somebody's lying, right? Like they make it seem like inflation prices, everything is down but eggs. Like eggs is the only thing that is up. I don't really believe that, man. I feel like they are hiding data from us, obviously, that they don't want us to see. But you know, like you guys know, like it seems like you're only dealing with the inflation problem yourself, but it's not true. Like we all are dealing with it. You know what I'm saying? We all see how it's impacting our daily lives every single day. But now, just looking at the CME group, you guys could use this as well, just to track how the markets is looking towards rate decisions, like if there's going to be a cut or a pause. So the next meeting is going to be in July, I believe is, I don't want to butcher it, but we see that July 30th, right? So that week, the last, pretty much at the end of this month, we're going to get the rate decision, and there's going to be an expectation of it's you 97, you might as well say 100% chance of a pause, right? And this is because of this week, really, like this week we had inflation data, we had CPI and PPI, and I'll show you guys right here also in the group, my Discord group. We trade the data live all the time, but it's also good to track it because you want to get an idea on what is the like what are the Feds going to do next, right? How is this data going to impact the markets? So as we can just see here, this is what happened with the latest CPI data. You could see that the numbers did come below the forecast, right? Because expectations was for the core year to year is what the central banks focus on, but we could see the forecast was at 3%. They was expecting it to be a little higher than expected, but we ended up being at a 2.9. Typically, sometimes, right? Sometimes we focus on the forecast and not the previous. But when it comes to inflation, it's about tracking the trend of how inflation is going, right? And the fact we see that this print came out at a 2.9 is actually higher than the previous. So it's showing that inflation is still a little sticky. We still seeing that inflation pressures is likely to rise. And this is what Powell was saying that we have to worry about. And then also just look at here, that headline year to year at a 2.7. We was above the forecast, but look at the previous. It was at headline is what the Feds can't control. But at a 2.4 heading to a 2.7, yeah, it makes kind of it makes a lot of sense right now for the markets to be almost fully priced in for another pause, right? Because this doesn't show the trend of inflation is actually declining. It doesn't show it. And this is the chart right here is like you could just see that this year we could just see like core is blue and then we can see orange is headline. You can look at them both pushing up, and this is not exactly what the central banks want, right? They want this. They want to see a decline like this when it comes to the line charts, right? But when they see stuff like this, like little bump, like they call it a bumpy road, right? They see all of this happening. They're not going to really rush into actual rate cuts. And it's good to understand this information, right? Because it gives you a bias. And I could just show you the charts right after this. But you could also, like, I know a lot of you guys want some free sources when it comes to looking at inflation data or economic data in general. Just go right here to trading economics, right? And you could just go to prices. And I want you to get like just look at core. Show you guys core. Let me go to core. Let's just go. Yeah, we're right here. Core CPI, right? Just take a look. Like it's just insane. You just see that March lower, April, May, now bam, higher than expected. Now we just go to this one, same thing. Look at the trend, right? March, April, low, May, inflation is coming higher. This is not what they want to see, right? We could just see here another one, March, April, May, June, higher. This is not what they want to see, guys. So you think that now, just looking at inflation, right? And to make it easier too, you could put it to a line chart as well. So you just this is that upside that we're starting to see in inflation. So looking at this data, now can you understand why the Feds wants to pause rates, right? Why Jerome Powell wants to play that wait and see game. It makes sense when you're looking at this, looking at the data. And now let's remember NFP, right? Because that was one of the big prints that would have set the tone as well. But what happened with NFP data last pretty much last week, right? Was everybody was expecting a big drop, but we're not even seeing the labor markets is not even showing any deceleration neither. We've just been very stagnant so far for the past few months, as we can just see here at NFP data, which is good, you know. But if the Feds want lower inflation, this is what has to happen. We have to see people lose jobs, right? Because when it comes to inflation, it really depends on the prices, depends on the businesses. Like just like an example right now for you guys, if you own a business and before, say you're selling watches, right? And before COVID, you was selling watches at $5 a watch, right? And then people stopped working. And then you're like, man, I can't like at that time nobody's paying for it, right? So in order for people to pay for it, you have to lower the price of the watch. You have to put it down to a price where, oh, you probably have to put it at $2.50, right? So now people start working again, and now people are spending and spending, and those watches at 250, everybody's buying them left and right. And you're like, okay, now I could increase the price again. I had it at 5, but now since inflation is high and everybody else is raising their prices, I could put my watch at $10, right? And then you just leave it there. So even though what they're saying inflation is lowering, oh, like we see that gas prices is coming down, some food products is coming down, but you're a business owner. They can't tell you to lower your prices of your goods, right? They can't tell you to, oh, you have to bring your watch prices down. At the time, everybody's still working. People are still paying for your $10 watch. So it's up to the business owners to do it. And that's the problem. And this actually came out from Governor Bailey he's the chair of the Bank of England. And he said that, hey, inflation prices are lowering, but the business owners is not dropping prices, right? And they're not monitoring them. So it sucks because like now when you go outside and buy it and you pay for stuff, things is like all time things is high as hell. Nothing is going down in price. But there's more detail for it. But just to give you guys a little glimpse of really something that is happening as well, right? Because if it was you, you wouldn't want to lower your prices to 5 if people was paying for it at 10. So that's one of the issues. But now, in order for the Fed's monetary policy to work, people have to lose jobs. And when we could look at unemployment, right? Let's see if we can see unemployment here. We have to start seeing because unemployment, like, because they said also that the labor data is no longer inflationary, which is which is good, right? Because we've been having strong labor that also means people have enough money to continue to buy goods. And with that coming out, that's just showing that inflation could still be high. So it's kind of crazy that they're saying that labor data is not inflationary. But just look at this number. Like, look at this big drop. We was sitting at 4.2% is the high, and staying around 4%. Just look at like how it was for the past 10 years. The highest was since 2020, like almost 15% unemployment. But that was because of a swan event, right? Obviously. But we got all the way back down to 4 at 22, and then we started ticking up back. The high was only 4.2%. So obviously, if we get unemployment data next month, what would be something like very bad is if we go over that 2%, that 4.2%, because as you could just see, usually just in current all the way from 2020 and moving forward, the best has been sitting below 4.2%. So that is actually positive for the markets. Okay. So far, this is strong labor. The Feds was expecting unemployment to hit at least 5%, right? And we just never did that. Like people was working, right? People were probably working two, three jobs, which is crazy. But obviously, behind closed doors is about wages, right? Is people wages increasing? Not really, but we could also check here. Like, let's see how the wages is actually going, right? And this is the problem, like just a conversation with us guys, right? Because people could work two, three jobs, but their wages is decreasing. This is deflationary. So people wages is coming down, working more jobs, they're going to struggle to pay rent, they're going to struggle to pay bills. With interest rates staying high as it is, eventually businesses is going to start letting people go. And this is how the feds use monetary policy to help bring inflation lower, because now once wages is lower, prices is increasing. So even though people have two to three jobs, they still can't afford those high priced goods. Then eventually the businesses is going to have to lay people off. And when that happens, now I cannot buy this watch again back like in 2020. So now eventually businesses will have to start lowering prices. And this is how they could start controlling inflation and putting inflation lower by hurting the US economy. So this is why the Federal Reserve have to be separate from the government, right? Because the government, they don't want people to lose jobs, right? Because that ruins their political stance, right? That ruins their election year. That ruins what they're doing as the president, right? But the feds, they don't care about that. So this is why they both clash. So just to give you guys an idea in what's happening, right? So when I show you guys this now, I could just show you guys the dollar chart, right? Because now when we look at the markets, which direction you think the dollar is going, right? And then you can understand why. Because now we can understand, okay, why we're looking for dollar buys, why dollar has been rising this whole entire time, because the markets is expecting the feds now to continuously pause rates. And that brings investors to want to buy the dollar against other assets. And yes, there's other reasons why dollar is selling off, like tariff situations and all this other stuff, but this is for another video. But this is what gives us an idea to look for continuation on dollar buys, right? So price action always changes. Like it's just good to understand the direction of the markets, right? So if the feds are looking to pause rates, that helps dollar buys. And if inflation data continues to come out higher, that give us another reason, an indicator to look for continuation on buys on the dollar. But now the opposite, if we see that inflation starts to lower, then this is where, right, we're going to see the opposite reaction. We're going to start seeing dollar start pushing bearish, because now investors is going to be anticipating the feds to actually start cutting rates. So as long as Fed speakers is staying hawkish, right? And this is why also it's so important to have access to news headlines, right? Because just like in a Discord, we just get these headlines. It's annoying, but it helps, right? So focus on the direction of travel, expecting rate cuts as soon as inflation falls. So he's over here even showing us that they're looking to cut rates. And this is a Fed speaker, Fed Daily, saying we'll cut rates when we see lower inflation. So right now, obviously, currently, she's not a dovish speaker, but she will be if she see reasons for uh, actual rate cuts. And this is live too. Daly says that's the wrong question when asked about July rate cuts. Uh, Most likely she's not. Says some inflation is suspected in good sectors due to disinflation somewhere else. Yeah, because it's good to listen to like what the Fed speakers say, because and all central bank speakers, because they give us an idea on what to look for. They tell us what data to look for. They tell us what they're paying attention to. It definitely helps us. Uh, it definitely helps us understand what economic data is important, what is not important, and what time of the month or whatever is important, because they let us know. Nothing is a guess, right? The central banks members, they actually tell us what they focus on, and then the markets look to focus on it, and that's how you find opportunities. It's just as simple as that, right? But hopefully this was helpful for you guys education wise. Remember, take advantage of these resources. If you guys want to join the Discord, you can just press the link in the bio or just message me on IG. But this stuff is important, guys, and this is why we like to focus on economic data, and this is what really helps you have an edge. But have a good one, and I'll see you guys in the next one.